Hi, I'm Hannah Wallace and welcome to FinextraTV. Today I'm speaking off the back of Newfound's Market Mission's opening event that looked at opportunities for fintechs scaling in the UK in the COVID era. With me on the line now to help me out is Anton Ruddenklau, Head of Digital Banking and Innovation Financial Services, KPMG. Hi Anton, thank you very much for joining us.
Morning, thank you.
So first off, really, what a great event. I certainly learned a lot. But how did you find it?
Yeah, it was good. As a sort of an expat myself, I like the idea of people coming to the UK and making a go of it. So always really, really keen to support others to do what I did. And I heard, good response actually afterwards from people all around the world who are interested in our market. So, from a newfound perspective, I think, mission achieved and good on them for trying something different.
Awesome. And we're going to be homing in on one area you spoke about a fair bit, which was around maturing the market, the power of capital markets and investment. But before we do, and before we actually look at the impact of COVID-19, it'd be great to hear from you what mistakes you were seeing from fintechs looking to scale up in the UK even before the pandemic.
Yeah, it's kind of interesting. So I'm very bipolar on all of this. I am the head of fintech, right? So part of my job is to advocate that part of the industry, but also I kind of have this sort of feeling in my stomach that just because you can make something doesn't necessarily mean you should make it. So before the crisis, I remember getting involved in sort of quick pitch events with WeWork and all that sort of good stuff. And these people would turn on up and say they've solved world hunger with technology, and they probably have, but they won't. And so I felt before the crisis we were getting to that stage where there was a bubble and a bit of froth. I think what's been quite healthy about COVID, it's going to sound a little mean, but it's not, is that it does sharpen your mind commercially. Where you're going to put your money and your effort and your time, because the froth is, in some respects, gone for the time being. So that's good. It means that people who are serious and have got great capabilities and are truly are entrepreneurs, they deserve to win. And I'm definitely behind them, going to back them. I think some of the big mistakes so far that I've seen, firstly, underestimating the amount of market change that is out there. So UK banking customers, whether they're SMEs, corporates or consumers, we don't like to change banks. And so that is a huge inertia to fight against there if you're going for retail. If you're going institutional, large banks, large insurers, large asset managers are extremely slow and will crush firms through the procurement process. So you've got a kind of a long-term view there as well. And the other thing is, not much market data out there. So how do you put a business case together that looks credible, that doesn't suffer that hockey stick effect that every business case says? And I can guarantee you, every business case says, I'm going to be profitable in 2-3 years. That's not the reality. It's probably more like 10. So those sorts of things are coming out right now. And this fabulous phrase, unit economics, is kind of our post-revisionist wisdom that we all use. Unit economics is important.
Nice. So, all right. So what's COVID brought to the scene then? How has this impacted the fintech scene?
Yeah, it's a world of pain on one side of the balance sheet and it's awesome on the other. So if you're doing lending at the moment, or if you've got a peer-to-peer model, for example, it is not a great place to be. One, because we've suddenly rushed to banks, flight to quality. We want to make sure our money is safe. We also want to make sure we can get money out. So the fintech, which really owned about almost 20% of the business banking market share in the UK, have suffered heavily. And some of that's been their own doing. And then additionally, the peer-to-peer models that rely on investors on one side to give money out on the other side, well, that doesn't work. So, most of the big peer-to-peer platforms have probably suffered about 15% loss of investor confidence already. That's tough. On the other side of the equation, if you're doing digital payments or if you're providing financial crime or cyber or identity type services to large institutions, it's happy days. In fact, payments are having record revenues right now, quarter on quarter. You see that in the deal flow coming through as well. Everyone loves payments. And this notion of cash not being wanted is incorrect. What we're actually really saying is we don't want paper, we want cash, but it's digital.
Right.
So from that perspective, I think that makes life a lot more interesting for fintech founders as we recover over the next 3 to 5 years from COVID, because actually the trajectory is really positive.
All right. Well, Following on from that, and sort of going back to the event, you spoke about maturing the markets. It'd be great for those that missed the event for you to go in a bit more detail here and tell us how this can be achieved. What should we be doing differently?
Okay, so a few things. I think smaller, more beautifully formed fintech firms would be a good thing. This kind of relentless focus on achieving scale at any cost is just not going to be, I think, acceptable. So if fintech firms are coming to the UK, my three pieces of advice. One, know your market and be really focused on taking market share in that small market. Don't go for global domination. That's one.
Seems obvious.
Yeah, it does seem obvious, but it wasn't a few months ago. I think the second one, which is really important, is don't try and be complex, be simple. TransferWise is one of our most profitable fintech, and it turned a profit very quickly because it's a simple proposition, well executed. You can understand what it is. And I've seen too many propositions come across my desk now, and I can't understand them. So if I can't, consumers or users won't be able to either. And then the last one is make yourself look bigger than what you really are, because no one wants to deal with a small firm that is quite almost irrelevant in the grand scheme of things, even though it might be great. So, make your proposition seem significant and material to firms, and make yourself seem like you're a safe pair of hands. That's going to be important. We've got regulations here around operational resilience. The regulator is looking for third parties to be resilient, and that's important post Wirecard, yada, yada, yada.
Well, I cut you off a little bit before when you're talking about payments, but you mentioned there's plenty of opportunity across payments digitization, especially at the event. It'd be great if you could go into a bit more detail here.
So I kind of mentioned on the line the other day that we've had probably near on 500 payments deals now announced globally since March 1st, since the so-called crisis. And if you look in the UK here, we've had 100 million given to Air Wallets. We've had similar levels given to SumUp. We've had Clearbank raise more money. These are big, chunky deals. And so I think what's happening is two things. Traditional financial services, i.e. the banks, talk about being open banking and opening up. They're just not doing it, frankly. It's predominantly underwhelming at best. The rest of the industry, credit card providers, payments fintechs, the hyperscales like Google, Alibaba, etc., are just going gangbusters. And so I think what's happening is the rest of the industry, e-commerce plus, is actually really adapting well and accelerating this digital change. And the banks are kind of sitting there thinking what their reason for being might be, or how they create an API. What is an API? Now, those are conversations you still have, unfortunately. So payments is going well. The areas of focus, if I was coming to the UK, I'd be going after wholesale payments. There's a lot in the consumer space. Go after business to business or infrastructure type services. That'd be one. Secondly, if you're right at the front end of the kind of customer proposition, anything you can make out of data from payments data, like services, will be really important. Credit scoring, identity management, communications devices for firms so they understand that payments have been made and received and all that. Any of those sort of add-ons with data are going to be particularly important. And then the final one is the ability to connect the real economy with banking is something we always talk about, still doesn't happen. So e-commerce rails into banking rails, we need more of that, particularly in wholesale payments. So that would be where I'd be heading if I was coming to the UK.
Brilliant. Well, thanks for clearing that up for me. And it was also asked during the event how fintech firms should balance their growth and customer acquisition alongside cash flow and runway concerns. What was covered at the event during that?
Yeah, we'd released some research the day prior, and we'd worked on sensitivity. So if demand was down by 50% for fintechs, what do they need to do in terms of cutting the cost to be resilient? And so we worked out, take demand down by 50, cost down by 25, and you've roughly got 18 months of runway left. Albeit half of our top 100 fintech need to raise almost £1 billion within the next 18 months to remain solvent. So, it's not all amazing while we're here, and it's not all great, but that does lead you to believe that resilience is there. And before the crisis, the average fundraising cycle was just under 12 months. So I've got some money, I'm the founder, I now need to start raising again for just under 12 months' time. Not a great place to be. I think the investors are saying they want to see longer cycle times for that sort of money. So that's one thing. Second thing is, Caroline Plum from Fluidly was on there, and I'm a super fan on Caroline, and she did a couple of really clever things, which are pretty much consistent in the industry here. Cut staff, cut salaries immediately, and then also put notice on their lease, which is a big cost for them. So they basically didn't need a building, right? They got out, and her view is when they come to find a new spot, they'll be able to find a place that's much cheaper in the rental market in London, because obviously there's going to be lots of vacancies. A really clever thing to do. So, that was kind of a working capital view. You go over to other firms. I've got a personal friend who's CEO of a decent sized fintech. They've estimated 10% demand for 18 months, 10% on what they were, and they were having record revenues beforehand. This is lending now. 60% cost, 60% reduction in salaries across all staff, 60%. But they're going to put a kind of a share kicker at the end of 18 months. If you hold fast and we get into good times, which I think we will, then people will be able to get a bonus off the back of that. Again, got out of the rental accommodation they were in, which was super trendy old street, but costing a lot of money.
Yeah.
And then took 150 people and said, we love you, but we can't afford to have you anymore. So those cash considerations are important. So you've got cash, investors, they all need to come together. But I think, again, there's advisors like us around, and we want to make sure the industry is looked after. So we'll continue to kind of put out data and information, run free consultation for people. What do you need to do to have runway, investor confidence, and also have a growth plan? It's important.
So just to clarify then.
Sorry, it's a long one, wasn't it?
Yeah, well, is investment during COVID-19 a pipe dream or not?
I'm drinking my coffee, apologies.
That's all right.
No. So if you are a scaled fintech here in the UK and you're decent and you're not structurally unsound, venture capital and PE houses will continue to back you. And the government has something called Future Fund over here, which is a matching scheme to continue that investment. So I think if you're Series A plus and you're decent, you're okay. Where the bigger issue is in startup or sort of pre-Series A smaller fintechs, where I think there will be a contraction. And what we've heard specifically from investors is like I was saying the other day, don't bring me the same old thing. I want to see something new and different and very niche. Really interesting one over here, being a Kiwi, is Oxbury, the agricultural challenger bank, just about to launch. And who would have thought that you would invent a digital agriculture bank? But it completely makes sense. And it's not another Monzo. It's not another invoice finance platform. It's not a Me Too. So I think, again, when you come to the UK market, do your due diligence. Don't have this view that your invoice finance product is better than the 50 we've got here already, because we've got 50, right? Come in with a point of difference, know your market, and play to your strengths. Now, the interesting thing about Oxbury is, who do they have consulting? Bunch of Kiwis who know agriculture, because back home that's what we do. So again, play to your strengths. If you're from the Aussie market, open banking is better and more perfected over there. It's really around opening up with data. Bring that with you, or bring insight from the Superand fund over there, which is awesome. We don't have one of those here. So bring something that's going to be different and give you that niche advantage.
And Anton, finally then, you're the global co-head of Fintech for KPMG, right? So it'd be great if you could tell us what KPMG is doing in this space around fintechs.
Yeah, so three things. I like to call it crusty innovation. So if you know KPMG, we're not really known to be the Starship Enterprise. We're a bit further back in terms of our innovation. So where we tend to head at the moment is three things. Connecting the industry, the old and the new, the fintech and the legacy firms, try and bring them together a bit more, or at least bring old thinking to the new organizations, or new thinking to the old, if that makes sense. So that connection is really important. The second one is, we have every relationship you could think of across the top 100 fintech globally and all the big hyperscales. So a lot of what we're trying to do then is think with our clients, how do we reimagine things that we've always known? My personal view is, And most of what we see fintech doing right now is pretty much a digital version of old product and service. It's just been made digital. There are a few firms out there, I think, that are really reimagining and changing how things work. So we're trying to do that, and we're trying to do that with the likes of Google or Alibaba or whatever, and bring the fintech in for personalization. That's an important one. And then the last one is that conduit between investors, regulators, consumers, is make that connection. I think people underestimate when you come here into the UK, we are regulated. Even if you're an unregulated industry, you're still regulated. There is regulation around you. That is a real barrier to speed to market. And I think what happens is you build a little firm, you get suddenly big enough for the regulator to see you, and it becomes a world of pain. So trying to connect those three together is really important. So that's what we kind of do globally. And then we try and do whizzy things like if, Singapore's got something amazing, we'll tell people in the UK or the US about Singapore, and classic consulting stuff, right? It's better over here, have one of those. So that's really what we do.
Awesome. So watch this space, I think it's fair to say.
Yeah, pretty much.
Awesome. Well, thank you so much, Anton. It's been great having you on, and extremely informative, but we'll leave it there. Thank you very much.
Thank you.